Hello, everyone. Today is Friday, February 17th, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 671, where it is our job to break down the most important trends, price action, and noteworthy moves across financial markets to keep you prepared for the trading week ahead. We're going to dive right into it today with our top takeaways here. Kept things pretty slim. There's a lot of noise out there. There's a lot of chop out there. There's a lot of cross currents out there, and we're going to dive into all of it today. But really, from the high level takeaways here, we still are getting hit with this hot inflation data. So we had CPI, PPI, we have all of these, I guess, hotter than expected, higher than expected readings coming through. The market is digesting it pretty constructive. I don't think you can be too upset with equity market reaction or performance. We've had a very strong run to start the first 5-6 weeks of the year, and now we're starting to consolidate and pull back a little bit, but it's pretty justified, especially in the face of some of this data. However, the bond market and the dollar are telling a slightly different tale. They are a little more anxious, upset, or kind of forecasting maybe something a little bit different, and we're going to talk about that in part two. Choppy technical picture all around. Doing less and kind of sitting on your hands is probably going to be the best course of action. So let's jump into the numbers here. If we look at the right-hand column, you can see, again, a very mixed week. S&P was down, but Nasdaq up slightly. Russell 2000 definitely had a little bit of a standout week today. We'll look at the sectors in just a moment, but up 1.5%. You can see over the past 1 month now, we still are in green territory here for the U.S. indices. Nasdaq is still, in fact, leading the charge for, I'm calling it the year. It's really just the 1 month, though. And, after the first red week last week, the Nasdaq bounced back this week. Now, if we do take a look at our trends here, you can see we certainly have some more red here. In fact, the short-term now trends, and we're just using a very simple heuristic here, is the 10 SMA. Is starting to decline now across the U.S. indices. So we've got this sandwiched sort of look here where the 50, the medium term, the primary trend here is still rising across the board. We still got mostly declining long-term and trends, and then we have that short-term declining trend. So we've got this very mixed picture here, just adding to the sort of chop, indecision, and angst out there that you're seeing. Now, volatility did come down this week. Now, we had a couple of catalysts to help kind of support that. So basically coming into this week, everybody was focused on CPI and sort of hedged and bracing for that. And, after all of those kind of catalysts from the economic standpoint got out of the way, you could see we did close lower here across all of the vol indices week over week. That is constructive. S&P is back to hugging close to that 20 VIX handle. Now, in terms of market breadth, we are still in positive territory here. So as we've talked about week on week, we were looking very closely at these statistics here, looking at the stocks at 52-week highs and the stocks at 52-week lows. And we are still seeing more stocks hitting 52-week highs. We are a little bit away from the triple-digit readings, but we are still, up in the upper double digits, and you can see the number of lows are pretty dried up here. So we are still getting a constructive, not super exciting, not amazing market breadth to the upside, but the bulls here are still at least putting up a good fight and trying to get that rotation to new highs. Now, we don't usually talk about the put-call ratio, but I figured I would start to introduce it here. So I'm actually pulling this from IBD's website. So they update this every day as part of their digital subscription. So as a reminder, IBD is a sponsor of this show. So thank you, IBD, for that. And you can get a link in the description of this video, or you can head to this bit.ly link right here to get access to their digital subscription. So they update their put-call ratio. I actually do need to do a little bit of homework here because I actually think this was coming into 217. So this was coming into Friday. We had a 0.89 reading on the put call ratio. I don't think this is how we left the day. So because I record these pretty early, I don't think this is updated yet. So I'm going to do some investigation there, but a 0.89 reading is still, a little bit on the upper end of things, let's call it. So there's definitely a little bit of protection being bid up and purchased, and a little bit of let's say anxiety of kind of protection to the downside move. So we're not at any extreme levels per se. We're not over 1.1 or 1.2 is when things really get panicky, but we are certainly seeing it up there. And I'm going to take a look at this and see if this number updates on in a few hours. Now, in terms of sector performance on the week here, again, it was a pretty split, a pretty split race here. So we had consumer discretionary, utilities, and staples. Very kind of curious bunch there. At the top three, though, the leaders of this week, all up about 1%. And on the downside, we saw energy really kind of taking it pretty hard this week, down 6.33%, followed by real estate and materials. So they were our laggards this week. Again, you can see over the past 1 month, we are still in mostly positive territory here for most of the sectors out there for the US. So, energy is really the biggest loser at this point now. Technology continues to be, and discretionary continues to be, those two standouts. Now, everybody still focused here on interest rates and credit markets and the bond market, and all for good reason. We are starting to see, or continuing to see, I should say, we talked about the start last week, but we are seeing interest rates start to break out, potentially start breaking out to some more meaningful levels, particularly in the short end of the curve. We did sort of retrace and kind of dialed things back a little bit on the close Friday and saw some reversals on Friday's session. But still, when we look at these yields now, we've got the 10-year up at 3.82%. So we're not quite back to the 2022 highs, but we're certainly getting close there. And as we sort of mentioned at the top of this video, equity markets don't seem to care all that much. And there's a pretty good dispersion, pretty good differential between what yields are doing now and what equity markets are doing. So typically, something has to give. One is usually right, the other is wrong, and then there's a fast catch up. So we don't know yet which way that's going to tip, but we're going to look at some charts here in just a second. Finally, if we look at dollar and commodities, Bitcoin at the top of the list here, up 14% this week, seeing some real strong strength out of Bitcoin, Ethereum, some of those big caps, and crypto just generally speaking. Copper, ag, dollar index, all were up this week. And on the downside, we saw silver, gold, crude oil, natural gas continue to unwind here. New 52-week lows, and just continues to be in this cascade lower here for natural gas after consolidating for about a week's worth of time. Now, finally, our trading systems here. So these are our fully rules-based quant systems. Merlin continues to participate in this market. Actually had a really solid week this week, despite the choppiness out there. The sectors and the stocks that it's going after seem to have at least held in there or rallied this week. So pleased to see some performance there, hitting some profit targets. Our short-term system just doesn't have too much of an edge here. It's looking at this market, it's looking at this chop, and it's just basically saying, you know what, cash is a great position to be in. This is a fast short-term system. So this could be, 50, 80% invested by Tuesday. It can move pretty quick, but for now it's going to, take the long weekend and basically sit in cash. So that is our positioning here for our two quant systems. If you want to get access to them, if you want to see some nightly trade reports, you want to see what they're up to, check out the trial we have or check out the documentation on our website to learn more about them. So we'll be back here in just a second with part two. All right, we are back. We've got TC2000 open, and we're going to start off with a different view here. So we've got all of the major U.S. indices here, Dow in the top left, S&P top right, Nasdaq bottom left, Russell bottom right. And we are looking at just actually a 5-day chart. I never look at things this close, frankly, but I've smoothed it out with just a line chart is following price, and then I've got our support and resistance, so our programmatic support and resistance areas that get drawn on. These are custom indicators. So if you are a TC2000 user, you can get these displayed on your chart. There's a download on our website. It is a premium download, so it does cost for this particular indicator. But what we are looking at here is just the 5-day action. And so what we can essentially see here is markets, if we just look at the Dow Jones in the top left, for instance, the Dow basically, just chopped sideways for the first 3 days of this week. And you can see it was essentially into the close here on Thursday. You just got this waterfall lower here. And, we're looking at just a 5-day chart, so it looks dramatic. But, basically we started to break below this channel of support. You got all these prior support kind of pivot areas in here, and the market broke below them on Thursday going into the close. And then you can see Friday, we are trying to rebound a little bit. Very similar behavior here in the S&P 500, chop, chop, chop. Breakdown Thursday, trying to recover here on Friday. Nasdaq, again, same things, different slope to it. So it was actually making some progress to the upside for most of this week until Thursday, where it kind of broke down lower. And then Russell is really the best performer here. As you can see, it started here in the bottom left, and in fact it actually closed towards the upper end, or at least the middle of its range, and it did manage to kind of hang in there a little bit better. So I feel like that's just at least a good little story to start on what this week actually looked like. And now if we go back to our daily time frame, and we sort of look at, I'm sorry, this is a weekly time frame. We look at the weekly time frame first, so the big picture. You can see that the S&P 500 now really spent 2 weeks going nowhere. So if we just clean this up a little bit, we had that inside week last week, and now, I mean, we nearly printed another inside week this week, but we technically broke below last week's lows before recovering. But essentially, just again, a very indecisive, get wicks on both sides here and kind of close the week pretty close to where we opened the week. So you've got now this fuel being ramped up here as everyone seems to want to take aggressive stance. There are loud bulls out there, there are loud bears out there, and frankly, the price is just saying that nothing is happening here. There's a lot of chop. There's a lot of ways to lose money here in the short term, and so ultimately, we haven't quite picked a direction yet. We are still just chugging away sideways here. And right now, as kind of the episode title here, we're sort of waiting. Is this constructive digestion, which I would say it is so far? I mean, I don't see how you couldn't label this constructive looking at a weekly time frame like this. But the problem or the concern is, does it turn ugly, right? Do we get a violent kind of breakdown here? Do we start getting an increase in volatility, and do we start losing these prior levels here? So we've been talking about this 40-80 level forever, and you can see we're arguably right below it right now. The market's kind of chopping around. We're going to go down to a daily chart, and again, you can see it's effectively lost that and traded well below it on Friday. But look at this turnaround here into the close. You just got buyers coming back in, or just a lack of selling pressure under here. And we drove up and we hammered out to sort of, or pin barred out to close out the week here on a daily bar. So yes, we did close down on Friday, but you can see it's not an easy fight. We're not just rolling over here and breaking down. So that's what we need to be on the lookout for here, right? So there's lots of strong opinions in both directions. Right now, as I see it, it looks pretty darn orderly here in terms of consolidation. But of course, risk can happen fast. But it looks like we're kind of flagging out so far. If we start losing this 40-80 level again, I don't like to see us lose this old prior breakout zone here, right? And that's what we've been kind of keying off of and talking about, especially when we go back to this view here. So, there is a little bit of concern that I have, the fact that we're starting to dip below this, but as long as you don't see, again, just these big nasty red bars with heavy volume just cascading lower here, you could chalk this up to some sideways digestion. And, again, when you look at the inflation data and you look at some of these catalysts that on their face value should be pretty bearish for stocks, just generally speaking, markets are hanging in there pretty darn well. So that's, kind of the situation we have in front of us. There's just lots of strong opinions in both directions, but as I see it, consolidation looks relatively orderly. If we start, again, breaking down to say below Friday's lows, we start losing this 40-80 zone more quickly and swiftly, and with volatility and with volume, then I start to get, much more pessimistic here in the short to midterm. But for now, I still am going to keep an open mind here. I just want to do a whole lot less. Again, I, charted my trade here in the S&P 500. You can watch the prior weeks here, but as soon as we got into this zone in here, that was it. It was too hard. It was too confusing, too messy to make a picture. As soon as we got up to this 40-80 zone, way back here is basically when I was selling things and selling on the way up. And I still just don't have a good, strong opinion here. So I'm going to just let price and time do its thing and wait a little bit further. And that's kind of the way I'm looking at it. If we look at the Nasdaq 100 and we go to Qs, you can see here that, again, we had this, ceiling of prior, potential resistance, which it kind of hit its head right into that 310 zone. and it's just consolidating. Again, I can make a very good case that this is pretty orderly, healthy consolidation here, especially after such a strong January. So we are up, essentially 19% in a straight line off of the lows, to start off the year. And so now we're basically seeing 2 weeks of a lot of sideways chop, a lot of indecision. We're 3.5% off of the highs made just 2 weeks ago. So again, you can look at this and say, it could be a top here. This could be a big lower high in the grand scheme of things, right? There's absolutely that case to be made. You've just got the series of structural going all the way back to 2021, lower top high, lower top, or that was, the initial kind of breakdown, lower high, and this could turn into a lower high. So it is absolutely possible. We're just not quite seeing the full effect of it yet. And so that's why this is a really big zone, because you're really looking to break a potential, longer term pattern here as I see it. And the jury is still out, but opinions are certainly high. We have broken the slope of the trend that we were marching above in January. But again, it's still a little bit close to call. And so when I draw my, key levels here, I would say the Nasdaq can come all the way back. In fact, I wouldn't be surprised if we come back down and tag and test and see how the action, sits around 294, 295 in the Qs. We didn't quite get down there. Again, you can see that hammer that we put in on Friday. We didn't quite break the lows from last Friday. So, we're still waiting to see if we can get down to this 294 zone, but this would be the bigger zone for the Nasdaq. I mean, this is a big inflection point. It's the December highs. This to me is the level that we really want to hold on an intermediate term basis. So I would say the Qs actually have a little more leeway here and a little more room. Even a day or two down next week to test this zone, I think would be, still kind of healthy or normal. And if we start breaking below this violently, then, all bets are off. So that's kind of how I'm looking at things. Again, I don't want to derail from the normal, kind of routine here, but you look at something like Tesla, which is just been the growth sort of, or the leadership, profile for this year for stocks. I mean, this thing is still extremely reluctant to sell off and break down. Again, you saw dip buyers just step back in on Friday here. It closed up 3%. You look at something like Bitcoin, which was, see if I can pull it up here, BTC. Yeah, I got to pull up yeah, there it is. You look at something like Bitcoin here, which saw just a very strong bid 2 days ago come into this market and put in, what could be a lower high here. And if this starts really getting going above, this zone here, this potential base, the July highs here from 2022, again, you just have these flavors, these pockets of momentum that are still just showing some risk appetite. When you look at crypto, when you look at Tesla, when you look at some of the growth stocks, they are still finding some bids here. And so that's why I do believe it's a very tricky spot. And I feel like I could make a good case on both directions. And so my default case here is just, I need to see more data. I need to see more time. But for now, things look relatively constructive. So we'll see what next week brings. Now, if we do look at the dollar, this is where, things get a little more concerning. You actually have the dollar breaking out or starting to find a bid. You start to see some more volume come in. We talked about this last week to start off the month of February, and it's been lifting higher. Now, it did run into some some resistance here, it seems, or some overhead supply. So it did fade on Friday, and you got this reversal in the dollar a little bit. So, I wouldn't be surprised to see it, really just kind of consolidate here. Maybe this is a new range for the dollar for the time being, as the market, as everything kind of figures itself out, so to speak. But if this is a little bit of a mini top here for the dollar, then again, it would coincide with maybe a little equity market rally next week. We shall see. 10-year yield, if we look at least the yields here, again, starting to break back out to the upside. Now, it is running into overhead supply again. So again, if you are looking at, say, the bond market and you're looking at the dollar and you're looking at them for kind of the direction of equities, well, you just got a nice run in both of those, in the dollar and in yields. And that was the weakness that we saw in equities, right? So that's when equities started to digest and consolidate and get off of their straight line up. And so now if we do believe that the dollar is going to take a pause here, maybe that, again, it paves the way for equities. If we look at volatility, the VIX is back up towards 20, but again, it did fade on Friday. So it did open the session up north of 20, and you can see it ended up closing at the lows of the day. So it does seem like volatility, in itself is kind of stuck in this range between 18 and 22. And so far, buy stocks at 22, sell stocks at 18 has been certainly working for 2023. So that's kind of, really the high level of this week. And I don't think it's worth going too much further around, but there's definitely a lot of mixed signals out there. Breath's still hanging in there, and equity markets are just chopping around. So let's give it some time. Let's see how things act. And remember, you don't have to trade every single day. Now, I did want to finish off here with our TR150 watch list. So I don't usually talk about the TR150 in these videos, but basically this is our bullpen of long ideas, essentially. So we curate, we have a bunch of different scans and different criteria that we're looking for, some rather unique things, not standard stuff. But when I look at our list here of stocks that we feel pretty good about, that we're shopping from, and I look at the sectors here, you can see that there is very few technology stocks in here. This is a lot of healthcare and a lot of industrials and energy stocks. And so you're seeing these types of names, we're seeing these types of names really hit our list here of stocks that we want to be focused on. And for instance, like we talked about at the first part of the show, our Merlin trading system, so it trades exclusively off of this list of stocks. And it had a pretty good week, all things considered. And it's fishing mostly from these types of names in here. So we update this list once a week. So this is actually about to be refreshed. But if you do want to get access to this list, essentially just an idea generation tool for you every single week where we're looking at stocks that we're fishing from, then definitely check it out. We'll put a link in the description of this video or in the top right of your screen right now. But the point of bringing this up today is to basically say, energy, defensive, industrials, healthcare, they're a little more boring, but these are the things that we seem to have a pretty good rotation or confidence in terms of forward signals. So that's it for me. Please leave a comment below. Let me know your thoughts. What are you thinking about this market? Are you participating in the chop? You waiting for a directional move here? Do you think that moves higher or lower? Let me know your thoughts in the comments below. And as always, I want to thank you for tuning in every Friday. Long form analysis just like this every Friday. Don't forget to subscribe, share it if you like it, and I hope you have a good long weekend out there. Markets close Monday. We'll see you back here on Tuesday. Take care and see you next week.